But yeah, let us know where you're joining us from. Get asking your questions, and yeah, we'll start in a few seconds. Yes, there will be a replay of this for anyone who is coming in and asking if they've got a hard stop. Hopefully we're aiming for about half an hour this evening, so hopefully we'll be able to cover everything that we've got planned and also answer any questions that you've got in the time. And with that in mind, I think we will get going. I'm sure there's another few people joining, but we'll just start with the introduction, and hopefully lots of people will have arrived by the time we get into the proper content. So welcome to this evening's webinar, which is all about how to make the right decisions when it comes to company news. And hopefully this is quite topical. We're just about coming out of results season. I think Graham and Roland and Mark are probably quite hopeful we're coming out of results season. It's been quite a busy few weeks for them covering the news. Let us know any victories, any mistakes, anything that you've learned from this results season. Get your comments in, and and hopefully we'll be able to address any comments, any questions before the end of the session. So the main purpose of this evening is to share some really practical insights which will help you make the right decisions when it comes to company news reporting, and also to quite excitingly put our new news filtering system at Stockopedia to the test. So I'll be showcasing that a bit later on. So however much we as long-term investors are told that we shouldn't be distracted by news and we should stick to our core investment philosophy, it is quite hard not to be. We've done some research, and in January we found that traffic to individual company stock report pages was more than 600% higher on a news day than it was on an average day. And we can also see it in our most viewed widget, which appears on the Today page. And that's always filled with companies which have reported news. So this is the most viewed widget at 10 o'clock yesterday, and all 8 of those companies that were the most viewed had reported either financial results or a trading result or a trading statement. So we do all know that news is it can be a vehicle which provides us with the information to build our long-term investment case. But we shouldn't be reacting to the news necessarily. In some cases, it's the right thing to do if there's been some brand new information that that throws our investment case into doubt, and I'll go on to talk about that. But it's always important to remember that the news is a data point. The news adds a further data point to our for more long-term investment philosophy. So the purpose of this evening's session is to try and help you make the right decision on the release of those news events. So I'm going to start off with a little bit of background. So in that background section, I'm going to introduce you to our rules-based approach to analysing and acting on news. I'll then showcase our news portal, and then we'll move on to the 2 main takeaways that I hope people can take from the session. And the first is that we'll be showing you how to use company news to check whether the investment case of a company, your investment case of a company, has been strengthened, or it still stands, or it's been weakened. And then doing this will allow us to move on to the second big objective of the evening, and that's to how to use news sometimes to identify investment opportunities. So first up, an introduction to Stockopedia's rules. Now, for anyone who's not familiar, at Stockopedia, we are all about rules-based investing. So I want to show you how we use our rules when it comes to news events. Now, these lean on research that we've done and also research from the wider financial literature. And I will be honest with you, there are quite a lot of rules, and I'm going to show them to you in the next couple of slides. But this is all really just for illustrative purposes, because the key in this session is to try and show you, actually put them into practice, show you how to use them on a news day. Now, don't worry, there is a lot of information, as I say, in the next couple of slides. These rules and these checklists that I'm going to show you will be available afterwards. They're actually in the appendix of this slide deck, but we'll also be emailing them out to everyone afterwards. So, first up, the first group of rules. And these are what we call the rules that are based on the essential characteristics of a company. So they lean more on the sort of more fundamental, more fundamental ratios and characteristics, things like sales growth, return on capital employed, PE ratios, as I say, which help you build the fundamental investment case. You can see here they're grouped into the sort of main factors of investing. This second group is more of a peripheral list. These are additional rules. They can be triggered by news events, or they can highlight red flags. I've grouped them here into 4 groups, and as I say, just for illustrative purposes. But I've grouped them into red flag rules. So these are the kind of rules that might be triggered on results day, and they can highlight potential companies that have red flags, companies that are maybe to be avoided. Growth rules. So we actually did a webinar based on ahead of expectation rules recently, so you can rewatch that if you head to our academy. And those growth rules really lean on the fact that companies which are providing ahead of expectation updates, or their share prices are leaping on results day, are inclined to keep growing. Then we've got smart money rules. Again, that's another section of rules that we did a webinar on earlier in the year, leaning on rules like director buying can be a positive signal. And then returns rules, so companies which are buying back shares and companies that aren't making material changes to their dividend payout. So yeah, as I say, all of these rules will be available afterwards, but the key that I'm going to go on to, is the importance of using these rules to really align with your investment case. So the second bit of background, which I think is quite important, is the use of factors in building an investment case. So you might build your investment case in a different way. The checklist and rules that we're going to talk about this evening can be applied however you like. But at Stockopedia, we do lean on 3 factors of investing: quality, value, and momentum, and any combination of them. So they're shown in the intersection of the Venn diagram here. And the reason that this background information is important, because as we're going to go on to show you, the investment strategy is really critical to consider when a company announces news, and because it will allow you to choose which rules, which checklists to apply as you're analysing that news. So just a quick overview at this point. So look, number 1, your first port of call when a company has released news is to look at the investment strategy. So at Stockopedia, that's shown by StockRanks. Secondly, and that will show us, that will lead us to pick a list of essential rules which we can lean on for our analysis, and then we can assess those additional rules which can potentially help show us any opportunities. So enough of the background, now onto the news, and specifically onto our news portal. Now, I'm going to show this properly in action when I provide some examples, but for now I will show you our news portal, just a quick demonstration of it, because it was launched yesterday and we're quite excited about it. So as you can see, this is on the main Today page. You can see we've got 2 toggles here: My Markets, which shows you the news that's been reported by companies in any of the markets in your region, and then the companies in your portfolios which have announced news. Now you can see it's ticked, the filters are applied, and I can change these filters by heading into the actual newsfeed. So this is the new page. Now, the key thing that's different here is you might want to, and it's quite important to consider, is you might want to filter based on different news, dependent on whether you're looking at your markets or your portfolios. Now, for me, when I'm looking at companies, just generally companies in the markets that I'm watching, I'm probably most interested in results, trading updates, and potentially some information about mergers and acquisitions, some key M&A activity, because that's the kind of news that really helps build that fundamental investment case. For companies in my portfolio, or potentially also in my watch list, because I also use the folio tool to build a watch list, I'm more likely to want to look at a slightly broader church of news, because those are the kind of news that might produce triggers or signals for making an actual decision about the companies that I'm either watching or the companies that I own. Another interesting little feature that has been rolled out is this fact that there's we're now showing the price change on results day in response to news. Now, this is significant because, and we're going to go on to talk about why, because price change on results day can be quite a useful indicator of where the momentum of the stock might go. So any questions for anyone who's had a little play around with this new feature so far, do let us know. But I will continue. I will move on to showing this new news portal in action. So, step one, using the news to check your investment case. So on the day of a news event, it is important to check that any additional information provided by the event aligns with the investment case for that company. So as I said at Stockopedia, we build our investment cases around the factors. So when there is a news announcement, the first thing to do is to check what type of stock it is, what is the investment strategy behind that stock, and whether today's news announcement aligns with it. I'm going to showcase this with a couple of case studies. So the first one of these is Greggs. So Greggs is a company that I talk about quite a lot. I am very positive about Greggs as a consumer. I'm just pausing because we're getting a few comments about the screen being blurry. I'm sorry, I don't know what I can do about that. If anyone has any advice for the screen being blurry, I mean, I can try and change my I mean, I'm getting my background sources are telling me that it's okay, so I'm going to carry on. But if it becomes too problematic, someone can let me know. So yeah, as I say, back to Greggs. Greggs, company I love. I'm a regular user of Greggs as a consumer, but as an investment, it has become a slightly problematic one. So that certainly wasn't the case through late 2022 to late 2024. Very positive momentum. It had all the hallmarks of a classic growth stock. You can see that in the share price here. So this is the share price movement. Sorry. The share price movement from late 2022 to late 2024. The share price rose about 87% in that time. And importantly, in that time, it was also checking all of the boxes for a high flyer company. And with each news announcement, the trading updates, results statement, everything, these checklists were being hit constantly. So we can see in March 2023, the final results, earnings 3% up, always in line with the expectations, really strong operating margin, 14% like sales growth in the interim results in 2023. So always very, very positive, was always looking very strong in this time period and always checking the boxes for the high flyer. Now, the share price movement in that time wasn't sort of blow the lights out fantastic on Newsday, but it wasn't terrible either. You can see here, and to be honest, this slide is a little bit blurry for me, but if you can see here that on results day, on trading update day, normally quite green, so up 5% on the interim results in 2024, for example. Now, this trend changed in the October 2024 Q3 trading statement, and this was the first one to show that the company was suffering from the ongoing economic uncertainty. And the share price actually fell quite sharply in the day of the announcement and in the following days. Now, since then, Greggs has followed up with another 2 news announcements, a trading update and the final results, neither of which were particularly positive. And on both of these occasions, so I covered the trading update in January, and Graham covered the financial results in March. And both of us wrote that the company had sort of been able to steer clear of an official profit warning simply by being a little bit vague about its forecasts. Also, significantly, the share price fell quite a lot further on the back of the results than it had done based on previous results. Now, if we have a look at the checklist in that time, we can see that the company certainly wasn't managing to keep up with its high flyer status. So this is a checklist filled in on that trading update in January. So still lots of high quality metrics being checked, but earnings not growing ahead of expectations. Brokers weren't upgrading their expectations, and the price was certainly not trending upwards. And again, these additional sort of more peripheral rules Directors weren't buying shares. Actually, there were some quite big sells in that time. Analysts not making bold changes upwards, and actually there were a couple that downgraded their recommendations. The share price was surging for sure after the RNS, but surging in the wrong direction. And although the company didn't actually use the term profit warning, I wouldn't say that the company was profit warning free. So the shares for Greggs have actually fallen 40% since October, since that first news event, which sparked of some dangers to come. And they're pretty much back to where they were before the start of that positive run. So really showing that a high-flying company, which isn't managing to keep up with those high-flying points, is one to be a little bit wary of, and potentially one if it's not if they're not ones that sorry, I was distracted by a very valid question, which I will just answer now. So the question is, are the checklists on Stockopedia, do you have to check it all yourself? Bit of both. So the checklist, as I say, we're going to provide them afterwards. But the main point here is that it's important to use any updates from the news. So for example, in this case with Greggs, I was using the checklist to double check that anything that was in the news announcement wasn't contradicting what I understood about the company's investment case. And for the last 3 news announcements, it was the news announcement contradicted my view of it being a high flyer. The second example that I'm going to run you through is actually one that's maybe a little bit more positive. So this is Computacenter. So throughout 2024, Computacenter was actually suffering in the same way that Greggs is suffering now. It's a really high quality company, but it was really suffering from a bit of a reversal in momentum. And I'm going to show you this actually on the stock report, because I think it's quite interesting. If you look at over the 3-year time period, it's been quite volatile. It's been quite an up and down kind of stock, but it was really this 2024 period where the share price really suffered. And we can also see, if we have a look on the news tab, that in 2024, all of these results and trading updates, they weren't being met with particularly positive reactions. So they weren't very badly down, but it's certainly all red. I'll just zoom in a bit here so you can see that there. Also at the time, so this is the this is the stock report back in at the start of 2024. And we can see here, not particularly cheap, a PE ratio of 15 times, but crucially, this was the start of the downward trend in broker estimates. So the brokers were starting to reduce, starting to cut their expectations. Now, again, go back to my slides. If we had a look at the checklist at the time, the company was really not checking very many of the boxes. So sales and profits stopped growing. Operating margins, not particularly strong. They're never particularly strong at Computacenter, so I'm not actually too worried about that box. But the other quality metrics, fine. Momentum, crucially, negative, and the value checklist, also negative. So this actually changed in at the start of this year, the 2025 trading update. I'm going to head back to the stock report, the historic stock report. So this is the stock report from the start of this year, from January 2025. And you can see at the time that the company was being rated as contrarian. This is mainly based on the fact it had a PE ratio of 11.7. Pretty decent PE ratio for a company of its quality. A dividend yield of 3.5%. Again, for a company that consistently pays a dividend, a well-covered dividend, that's quite strong. Price to book value, not so impressive, but again, very, very high quality company, and actually a better price to book value than it had been. So ranked as a contrarian stock. And so it was worth, during this trading update, using the contrarian checklist. Now, as I say, sales and profits. So during that January trading update, the sales and profits, they weren't actually particularly strong, but the main thing was that they were starting to strengthen. Having had quite a poor first half, the company was reporting in this trading update a real uptick in the sales and profit growth. Operating margins, as I say, this is across, but because that's quite consistent for Computacenter, I'm actually not too worried about that. So using this checklist, it doesn't necessarily have to check every single box. But I think in this case, there was enough of the green boxes checked. So shares trading on a reasonable price to earnings ratio, decent dividend yield, as I said. And then crucially, so there's additional useful rules. The share price was starting to surge after the RNS, and the company was profit warning free. And it was during that trading update, it really sparked a bit of a turnaround in the momentum of the company. The share price is actually now up 21% since then. It actually surged again this week on the announcement of its annual results. Interestingly now, it is not what I would call a contrarian stock. The share price has moved so much that it's no longer got a reasonable price to earnings ratio, and the dividend isn't yielding quite so high. So when Roland looked at the financial results this week, he actually used a different checklist. He used a high flyer checklist, and the company isn't quite ticking quite as many boxes as for the high flyer checklist as it was for the contrarian checklist back in January. So I'd say that it was really around that change when the company went from a contrarian stock to a slightly more momentum growth-based stock, that was where the real opportunity was in picking up those shares at a decent value right as they started to take off. So just a quick overview again of these rules. So step number 1, look at the investment strategy. I know we've done this slide before, but just to reinforce it. And this shows us which essential list to use when we work through and we compare the news event to those rules, and then assess any additional rules to provide any additional information to the investment case. Now, finally, the news can provide us with opportunities. And I think probably the most exciting example of this is Filtronic. So Filtronic, this is the share price performance of Filtronic over the last year. It's been a really fantastic performing stock. And this is pretty much all based on the fact that it has been winning and extending contracts with SpaceX. Now, there is a fundamental investment case to be made about Filtronic, and you can see that. So this is ranked, and you would class it as a high flyer stock. So I'm using the high flyer checklist. The company's operating margins, return on capital employed, have really strengthened in the last year or so. The balance sheet has always been quite strong, and sales and profits are obviously always growing. Earnings growing ahead of expectations, brokers upgrading their expectations, and the price trending upwards. These are all sort of historic features of the Filtronic investment case. So none of these are the things that have particularly strengthened in the last year. But the main thing that's changed is that the share price just keeps surging after an announcement of a contract or a contract extension. And that is one of the many rules that we have, which show which can be applied and can showcase opportunities around actual news events. Now, I would just give a little bit of caution at this point. It's really important to make sure you're applying the correct rules to the correct strategy. So Filtronic is a high flyer, so it's benefiting from those share price surges. That's where the momentum is heading. And the same is possibly true in reverse. A company which is suffering from profit warnings, share price downgrades, this is problematic if the company is a high flyer and is leaning on the fact that there are momentum factors at play. For a company that's maybe not leaning on momentum, so contrarian stock, for example, negative momentum on news events isn't so important. So that's why it's really crucial to make sure that when you're assessing a company's news, you should look at the investment case first. As I say, we've got all of these checklists in the appendix. So yeah, these slides will be available. And yeah, you can put them into action. So 5 minutes left to go on on this session. I realised there was a lot of information there, but yeah, any questions, get them coming in. How fast is news or earnings incorporated in Stockopedia? That's a good question. It's a very valid question. So, and I think that is something that's worth addressing. So we incorporate the news as quickly as we can. We obviously show the news on results day, so that's in our news portal. You can see here, and actually, for a company like Softcat, which had announcements today, we can see we're showing that the results were today, and you can have a look in the news portal. The time it takes them to get incorporated into the stock report is very much dependent on Refinitiv making that available, and it varies dependent on the size of the market cap. So for a larger company, it can be a couple of days. For a smaller company, it can be a couple of weeks. So there is that delay in getting that news event actually incorporated into the stock report. There's also a delay, therefore, in getting the news incorporated into the stock rank. And that's why it's really important to lean on the rank and also the style of the company, and use that alongside the checklist to help inform your interpretation of the news. I know there were some questions that were sent ahead of time, so I will have a look at these. So this is an interesting one. So how does news-related price momentum impact short-term trading strategies in financial markets? Now, this, as I say, really depends on which kind of stock it is that you're looking at. So for some companies, especially companies which are benefiting from momentum, the short-term, the price momentum really does making it have an impact, and we've done research which we did talk about in the most recent webinar, which showcases the impact of what's called post earnings announcement drift. And post earnings announcement drift shows that when a company announces results or reveals its earnings and the share price moves on the day of that news, the share price does tend to keep trending in the same direction as the direction that the price moved on the day. And this is a phenomenon that we found can last for between 3 and 6 months. So investors who are looking at investments over that time period, is definitely worth taking into account. And the second question in this list of questions is, how do financial markets react to breaking news, and how does it impact price momentum? So yeah, again, as I said, so the second part of the question, I think I've maybe just answered, but the financial markets reacting to breaking news really depends on the size of the company, depends on the size of the news. I mean, all sorts of different changes. I would say at the moment, what we're seeing is companies or financial markets are actually reacting quite extremely to breaking news, and we're seeing quite a lot of share price falls on results day for results that actually weren't particularly bad, and some of them are quite big moves. And actually, Roland wrote along these lines this week. He wrote about the fact that there are quite a lot of what we call falling stars. So these are high quality companies which are just suffering from downward trends in momentum. And we're really seeing that these are the kind of companies, these high quality valued companies, which are reacting particularly badly on results day. What are the risks of trading based on news-related price momentum? There are risks, and that's definitely worth being aware of. It's definitely worth being aware of the fact that these are shorter-term signals, for want of a better word, and with that comes a little bit higher risk and a little bit more volatility. So making a decision based on news-related price momentum is probably not something that I would recommend in isolation. But as I say, the checklist that we've talked about today can help you understand where news-related price momentum can be used in addition to the investment case that you've already built. And this is really around growth strategies which lean on an element of price or earnings momentum. Let me see. Any more questions? How quickly does Stockopedia change its risks and rank scores? Yeah, so that's as I say, it depends on how quickly we get the data from Refinitiv. It is worth adding that Refinitiv are quite responsive if we prompt them. So if people are seeing big delays, do feel free to reach out and we can prompt Refinitiv to get their information updated. Is U Group a good investment? Okay, this is an interesting one, and it's actually one we talked about in a previous webinar, because it's really been benefiting from post earnings announcement drift, and what had been over the last sort of year. Interestingly, so I haven't actually looked at U Group this year, but this looks like a point where maybe the share price started to fall. So I assume that this was a trading update, and as I say, this is potentially an example of a high quality, high momentum growth stock which suffered. So yeah, this was 21st of January, a trading update where the share price fell 9%. Now, if I take a look at our high flyer checklist, so this is the high flyer checklist. Checking the boxes for a lot of these. Sales and profits are growing, operating margins still strong, earnings growing ahead of expectations. Now let's have a little look here, because presumably they weren't growing ahead of expectations at this trading update, which is potentially what sent the share price down. Earnings forecasts have been flat, so there haven't been any downgrades to expectations, but also not any upgrades. It's an interesting one. It's an interesting company. We are positive about it at Stockopedia. It has a stock rank of 95, but I would be a little bit wary of that slight downturn in momentum, because as I say, it can trigger some sell-offs. Way to screen for ahead of expectations. So that's actually not something that we can do at the moment, but that is definitely something that we'd like to roll in, because this, especially for investors who are looking for growth stocks, ahead of expectations is it is a good rule to be looking at. Is it possible to search the newsfeed for historical news of specific companies? Well, not the news feed, but if you look at the specific company that you're looking for, then the news feed exists within that company. So this is obviously U Group, so you can use this as the specific company version of the news feed, and you can filter. You can add any additional news that you'd like to see in this feed for each specific company. So thank you for that question. Are Stockopedia looking to create an AI section on earnings, which highlights the summary earnings call together with expectations moving forward, as well as potential risks? AI is an interesting topic, and it's one that everyone's very interested in it. And it's definitely something that we're exploring. It's funny though, it's a lot harder than Donald Trump would have you believe. And so yeah, we are exploring the use of AI to get some summaries of news as efficiently as possible, but we don't want to do a worse job than Graham and Roland and Mark do with their overview, their summary. So this is not AI generated. This is what our analysts do every morning. So we want to make sure that if we are going to be providing AI summaries, they are at least as good as the summaries that we're currently providing. Anything else? Is ME Group a high flyer share? Let's have a look. ME is a high flyer. So that's based on the fact that it's a very, very high quality company, a quality rank of 99 and a momentum of 82. Interestingly, ME International, so positive share price growth over the year, but there has been a downturn here. So again, I assume this is a trading update. So 5% on trading update and then 3% on the day of annual results. So potentially this is something. So the momentum rank has actually fallen. It's fallen 13 places in the last 30 days of trading. And that's actually something that Mark is going to look into. It's funny, we were talking about it today. Whether or not that downturn, if the momentum rank, if falling the momentum rank from something like 90 down to 82, is something that should be worrying for investors. So watch this space for Mark's analysis of that. So for now, ME International is a high flyer. But again, if we were looking at it against the checklist, I would say it's probably not. It's probably at least crossing the share price surge after the RNS. And then let's see if there's been any downgrades to expectations. No downgrades. Oh, actually, slightly for the year to March 2025. So another one to maybe be a little bit wary of. Many growth stocks are struggling right now. Yes, it's true, but it's also funny. There are a huge amount of stocks which are high flyers at the moment. It's certainly the checklist that we're using the most as analysts. But when you are a high flyer, when you're leaning on that momentum, it is that change in momentum that can really cause a problem and cause those big sell-offs on results day. So that's why it is very, very important to make sure you're comparing the investment case as a starting point in your analysis, because for some companies that an earnings miss is less significant because it wasn't highly valued. The momentum and the growth wasn't a fundamental part of the investment case. I think we'll leave it there because we're on 5:37. But hopefully that's been really interesting, and you've learnt something from this evening's session. I've certainly found myself having the rules to lean on has been really helpful for my own investing. I have made plenty of mistakes with stocks that I've held on for too long, and actually Greg's is one of them. I analysed that in January without using a checklist and stuck with a positive rating of it, and I've definitely been proven wrong. So having that checklist has really helped me out, and this is something that hopefully you'll be seeing a lot more of within our analysis, a lot more of within Stockopedia, and we'll probably be doing more webinars on in the future. So any questions you have on this theme, get them in, and I look forward to seeing you at the next event. Thank you everyone for joining.